Hi, Hayden Groves with you. What's changed since the federal budget came down? Plenty. The market was already showing signs of cooling thanks to the war in Iran, raising petrol prices and particularly diesel prices, starting to impact household budgets, along with the couple of interest rate rises throughout 2026 so far, has meant that people really have started to pull back from being engaged with the property market. Mind you, having said that, we still have fundamental disparity between supply and demand. We're still really undersupplied and demand is still very high because of the great economy that we enjoy here in Western Australia compared to our East Coast states. And so as a result of that, we still have a lot more people coming into Western Australia, keeping upward pressure on those house prices. Affordability constraint is also a factor. We're now starting to see people just not being able to engage in the market because unfortunately affordability has just got a little bit past them. Also with the budget, of course, the federal budget making some pretty controversial changes to negative gearing and capital gains tax settings. And I think that one thing that we're failing to really see what's going to happen with these changes, should these pass into law, is I think tenants are going to get left behind. You know, for generations, mum and dad investors, unsophisticated investors, have been buying property which they rent out and hoping that in time, and normally they do, get a capital gain through that asset. But the incentive, the negative gearing incentive, even though they negatively gear for perhaps just over 5 years on average before the asset starts being positively geared and they're paying tax on the income, the negative gearing for ordinary wage earners is a really great incentive. And so if you remove that and only rely on new builds where you can claim negative gearing, it pushes interest from investors' perspective into the fringes of our cities, because that's where most of the new stock that's affordable, apart from apartment stock, and that's another story we can talk about, is making it compete. The investors will be competing with the individual mum and dads who are looking to buy their first home, and young people looking to buy their first home. So I'm not sure the changes to negative gearing are really going to be very helpful to renters. I think where tenants want to live is in places close into the city centre, where the universities are, where their workplaces are, where their social environments are, where their families already are. And so there's going to be, in the established market, fewer and fewer investors, which is good for first home buyers potentially, but the reality is that we're going to have a lot of problems with rental stock in the close-in city centre areas.